This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
The first topic that we're going to look at in the VAT chapter is registration. Registration and deregistration. It's the first major topic. So if you have historic turnover, then you are compulsorily required to register for VAT. Now this historic is what's happened in the past 12 months. We're going to look at that in some more detail in a moment. Now a trader supplies, i.e. sales, may be either standard rated 20%, zero rated 0%, or exempt, and these are not included in any calculation that you need to make, but these two are. So it says there that taxable supplies are those that are either standard or zero rated. Once you are registered for VAT, which is a sales tax, then you must account for the output VAT on the sales. So I always think of it this way. Sales is out, purchases is in. So that's output VAT and that's input VAT. Easiest way to remember. Supplies in the previous 12 months mentions there the value of the taxable supplies. Once it exceeds that limit, 85,000, then you must register. Now these two limits, they are in your tax rates at the front of your notes. They're at the front of any manual that you ever do research in or read. They're at the front of every exam. Please check, never ever guess. And then HMRC, which is the government department, must be notified within 30 days after the end of the period when the taxable supplies exceed 85,000. You can see that this section here could very much be multiple choice questions that you might get in the first section of your exam. And it says there, from there, so you must notify within 30 days of the end of the period, which is normally the end of the month. Then you will be registered from the first day of the second month after the limit was exceeded. Again, you can see that being a multiple choice question. This is the month in which this trader exceeded 85,000. When must he notify by? Within 30 days. When will he be registered by? You can see that as a multiple choice question. Now VAT, while I think on, VAT is about 10 marks in this exam. And this is one of the topics that can come up as part of that. Now, I'm going to explain to you now what I mean by a rolling 12 months. Which is the way that we calculate whether or not somebody has exceeded the limit. And you'll see this is the kind of question that you could get for this. So Orchid commenced trading 1st of June 2022 and had sales, and what they've done is they've given you a lot of months with figures on. They're all standard rated, so that's good. So that's what we need in order to be able to calculate. Now remember, we're looking for 85,000 in 12 months. That's what we're looking for. Okay, we're looking for 85,000 in 12 months. So if we start here and start to add up, so if that's month 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So from June 22 up to May 23, that is 12 months. Okay, now at the end of May, at that time, the total is 64,000 400. So in that 12-month period, they did not exceed the limit. Now, a rolling 12 months means we take off that one and add on that one. So we've rolled it forward 1 month. Okay, so if we now add up July, August, September, October, November, December, January, February, March, April, May, and June. So what we've technically done is deducted 3,900 because we've taken that one off, and we've added on 11,800 because we've added that in and we've taken that off. Now that is only 72,300. We're not quite there yet. So what we need to do now is to do it again. We roll it forward 1 month. So we take that off, and this becomes the 1st, the 2nd, the 3rd, the 4th, the 5th, the 6th, the 7th, the 8th, 9th, the 10th, the 11th, the 12th month. That is our period now. So the calculation of those, we're taking that off, we're adding that on. So we started with 72,300. We take off 3,800, which is the July 22, and we add on July 23, which is 17,500, and I think you can guess what the answer might be here. We now have a total of 86,000. Okay, so the question asks us, when will Orchid become liable to be registered for VAT? Now I'm going to show you the model answer because I wanted to show it to you as maths, because the model answer is laid out in sentences, which makes it a little bit more difficult. But you can read through that. Just make sure that you watch that. If you're not sure, stop the recording, go back and watch that rolling 12 months. It's 12 months. Take off, add on, roll it forward. Take off, add on, roll it forward. Okay, keep doing that until you reach the limit. Now the answer then, Orchid will become liable to VAT when its taxable supplies during any 12-month period exceeds 85,000. That is the rule. This is the application of the rule. That's how we've applied it. So they will have to notify by the 30th of August, being 30 days after the end of the period. Okay, that is the rule. That is how they have applied it. And then this is the rule. That they will, that's the application of the rule, the start of the next period, so it'll be the 1st. Now it's always in days, never months, okay, because obviously some months have different numbers of days in it. Okay, now that's the historic, what happened in 12 months up to a certain date. Now we're looking at what's known as future turnover. This covers a period where you kind of pottering along around the 60,000-70,000 turnover, and all of a sudden you get a big order. Now the revenue don't want to wait for that order to be included in the previous 12 months. They want it in advance. So a trader must register if taxable supplies will exceed during the following 30 days. Okay, so that's covering the next 30 days. Usually covers big orders. You must notify by the end of the 30-day period, and you will be registered from the beginning of the 30-day period. The rules are different. Okay, this one particularly, because we don't want to miss that big order. The revenue don't want to miss the output VAT on that big order. So, Tulip Limited commenced trading on the 1st of April. Its forecast income is 90,000 per month. The company's sales are all standard rated, which is what we need. state the date they must notify the revenue by and the date by which they will be registered. Okay, again, always write down the rule if there is one. They must register if there are reasonable grounds for believing that taxable supplies will exceed in the following 30 days. That is the rule. You've then applied it and given them a date. So they must notify by being the end of that 30-day period. So that's the rule, that's the application. And they'll be registered from the beginning of that period of time to include all of those extra orders that might be coming along. Now you can, should you want to, voluntarily register for VAT. You may decide to do this even though you are below the limit. Now, why would you do that? Okay, why would you register for VAT? Because the math, the paperwork that surrounds this is quite complicated. There's a lot of paperwork to do, but there are benefits. Benefits are, if the trader makes 0 rated supplies, in other words, their output VAT is 0. However, their input VAT can be reclaimed, what they've made on their purchases, and therefore they'll get a refund of that VAT. Okay. It says if they make supplies to customers registered for VAT, input VAT can then be reclaimed. Okay. It says it here, not normally beneficial to voluntarily register where customers are members of the public, because obviously they can't recover the VAT. And we have a little example here that shows how we can work out the situation. And again, voluntary registration, the benefits, that can be a multiple choice question. These little things can be lots of multiple choice questions possible with VAT. So Vine has been in business for many years. All of its sales are standard rated and are to the general public. It's not registered for VAT, and its annual income is that which is below the limit, below the registration limit. However, they are planning to increase their prices with an annual income of that which is above the limit. There is, however, no further scope for any price increases. Their standard rate expenses are £4,800 a year, including VAT. Whether it is beneficial for them to put up their prices may not be beneficial for them to do so. Shall we have a look at what the answer says to this? Okay, so the answer, prior to putting up their prices, their profit was 75,200, being their sales less their expenses. That's come from the question. If they put up their prices, they will exceed the limit. Okay, state the obvious. Now, sometimes you think, well, that's too simple. No, you know the rule. You've stated the rule. It may seem obvious to you, but you could get marks for that. So they will have to register for VAT. Now, output VAT will have to be absorbed by Vine as the sales to the general public, and there is no further scope for price increases. So their revised profit would be 87,000 times 100 over 120 to account for the VAT. Okay, so this is the net sale, net profit, okay, after VAT, less the expenses, gives them a net profit of that. Now, before, their net profit was 75,200 without VAT attached to it. So it's decreased their profit, and it's not beneficial for them to put up their prices. Now, that's an unusual question. You're probably not going to get one of those in the exam. But do you see how this has worked out? once they're accounting for VAT, then the VAT is part of the answer. Therefore, you have to deduct that in order to come to the net profit for your profit calculations. Now, pre-registration VAT, okay, it can be recovered in certain circumstances. The circumstances are as follows. The inventory or the stock, that's the stock that you've bought, and your net current assets must have been acquired for business purposes and not be sold or consumed prior to registration. No more than 4 years prior, but that's a long time, isn't it? Services must be for business purposes, and the services were not supplied more than 6 months prior to registration. Just a bit of information there, it's something that you are unlikely to come across in any exam question. So that's VAT registration. We've got historic registration, back 12 months rolling forward, and future registration and how that works and whether it's worth registering voluntarily. Now, deregistration, there are two situations where you cease to make taxable supplies and then you must notify within 30 days. Or you can voluntarily deregister if your taxable supplies in the next 12 months are less than 83,000. Now that's lower, but the limit is in the rates. And we've got an example here. So Iris has been registered for VAT since 1990. Its sales are all standard rated. The company has recently seen a downturn in its business activities, and sales for the year ended June 23 and 24 are expected to decrease. So they're going down. So they can request the revenue cancel VAT registration because they're not going to exceed that, as long as, watch this, not temporary. Okay, if it's not temporary, all right, it will be cancelled from the date on which the request is made. Further circumstances, there is a deemed supply of business assets such as plant and machinery where the trader ceases to register for VAT unless VAT due on the assets is less than that. So that is a consequence. So, however, if a business is disposing of those assets as a going concern, there's no output because it's outside the scope. That's a technical term. It's outside the scope. Conditions. Again, multiple choice question here. What are the conditions for disposing of assets and a going concern? It must be a going concern. The business must continue to be able to trade. No trade break. So in other words, it's selling it from one person to another or incorporating. Same type of trade being pursued. You're not changing the trade. And they both must be registered for VAT. Got an example here of Daisy, a self-employed builder. Good for her. She's registered for VAT. Business is quite successful and she's decided to incorporate her trade into a new limited company on that date. All the assets are going to be transferred. Now you'll do more on incorporation and all the consequences of that when you do advanced tax. But it basically means you go from being a sole trader to being a limited company. So you change from paying income tax to paying corporation tax. All sorts of consequences of incorporation, but obviously the rate is much lower at 19%. So no output VAT will be charged on the value of the inventory and other assets. It's a going concern. The company must or will be registered for VAT, and they can take over the VAT registration number. Now that is not always a good idea. Sometimes if they've got a bad VAT history, then it's best to deregister and then re-register.